Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Let's go straight to the top story tonight. Tata Consultancy Services created history today. The IT bellwether has grown more than 12 times in value since its debut on the Lal Street in 2004, breaching the $100 billion mark in market capitalization today. With this surge in valuation, the tech giant has raced past the global consulting services leader Accenture, albeit briefly. TCS rise has been staggering, to say the least. A decade ago, Infosys was setting the marker for the industry, but the last decade has well and truly belonged to TCS. In fact, TCS is now 2.5 times more valuable than Infosys at current market prices. Anuj joins us now to retrace the company's journey since the day it listed on the Lal Street. Anuj, a historic day for TCS.
TCS, of course, has hit a market cap of $100 billion. And let's track the special journey of a very special company. It listed, of course, in August 2004 at a market cap of 47,000 crores, which at that point, of course, was $10 billion. And in a country like India, you'll have to take into account that rupee will always keep depreciating. So that also is an important factor. September 2006 is when it first doubled its market cap and hit 1 lakh crores. After that, a bit of a hiatus, but October 2010 is when it hit 2 lakh crores. And after that, again, a bit of a hiatus before it hit 3 lakh crores in March 2013. After that, a very quick fire 1 lakh crores was added in same year itself in December 2013. And October 2014 is when we had 5 lakh crores. After that, the Indian IT went through a bear market of its own. Values were destroyed by a lot of companies. You saw the revenue growth and profit growth fall, but TCS found its mojo back and in Jan 2018 hit 6 lakh crores. Today, of course, hit 6.8 lakh crores, easily cost the $100 billion. What if you had invested in TCS's IPO, 1 lakh shares? Today, the value would be worth 16 lakh, a bit more than that actually now, and dividend also 21,000. Most of it, of course, is tax-free. Now, the key point here is when TCS listed, Infosys was the bellwether, and for good reasons, because it had created wealth so many times over. That, of course, would always remain the case with Infosys, because it listed at a market cap of less than 1,000 crores. So TCS listed a 25% discount to Infosys, and it took 6 years for TCS to catch up with Infosys. But after that, there was no looking back. It just kept gaining momentum and kept gaining size. In fact, now it's 2.5 times of Infosys. And in fact, if you take into account the entire IT pack in India, all the IT stocks put together, even they can't match up to TCS. TCS is now 52%, Infosys, of course, 20%, HCL Tech, Wipro, and Tech Mahindra making up the rest of the IT pack. But truly phenomenal. And just one more point. It says a lot about the corporate governance standards as well for Tata Sons and Tata Group. They recently sold stake at 2,800 per share. And after that, you have seen a 17–18% rally, and of course, great results as well. So, big salute to TCS from the market, $100 billion market cap.
Anuj, thanks very much. We also spoke to the man who nurtured TCS in its formative years, N. Chandrasekhar. He's been rewarded with the corner office at Bombay House. Chandra told us that achieving the $100 billion milestone is only the beginning of the next big run. Here's Chandra and 2 other former TCS veterans on the company's journey to $100 billion and what the future could have in store.
It's a very special moment for all of us, and I'm extremely proud. And I've always maintained that TCS has enormous potential, and the digital transformation was only going to accelerate the market potential for TCS. Technology adoption, especially in the digital domain, is picking up mainstream. I've always said that the delay is because of a number of factors. It's not only the capabilities we have, it's also the readiness of the clients, and all those things are coming together. The digital transformation is going to be the biggest opportunity, primarily because there is going to be more technology in every industry, whether it's a B2B industry or a B2C industry. So we have been making these commentaries and also parallelly investing and building capabilities and being ready for this adoption cycle. And this adoption cycle is gaining momentum. And I mean, if I may say so, I think it's the start of the next big run for TCS.
Without systems, none of the global customers in any sector, in any industry cannot function today. And when an organization like TCS with the technology capabilities and the platform capabilities is able to integrate things and deliver value, that's what scale is all about, and that's the differentiator between TCS and any other organization. Implementation, execution, and execution for scale is what we pride on.
Ride the waves, and we have proved that we can even compete very effectively in the market. I don't think TCS shies away from evaluating opportunities because, of course, the big deal that we had done was eServe, as you remember, where we spent $512 million. But that was the largest acquisition that has been done. But over a period, lots of opportunities has been looked at. And somehow or the other, none of them stood the test as to whether we can get 1 + 1 = 4. And whether there are quite a lot of organic capabilities that we could still exploit and so on. So I'm not sure that it is outside of TCS's radar, but certainly, TCS has not made those big acquisitions and still grown substantially.
Well, TCS veterans there on this milestone. In fact, Infosys co-founder N.R. Narayanamurthy has also congratulated the company. He told CNBC TV18 exclusively, and I quote, "I'm an admirer of Chandra. I'm very happy for India that TCS has indeed reached a market cap of $100 billion. I wish TCS all the best. Look forward to the day when an Indian company will reach a market cap of $200 billion. That's N.R. Narayanamurthy. But another big development coming in from the House of Tatas, the group has appointed former Foreign Secretary S. Jaishankar as its president for Global Corporate Affairs. In this new role, Jaishankar will be responsible for the group's global corporate affairs and international strategy development. Tata Sons international offices will report to him, while the former Foreign Secretary will report to Tata Sons chairman N. Chandrasekaran. What's interesting is that Mr. Jaishankar barely resigned at the start of the year and has already now got this new assignment, a new role with Tata Sons. So the cooling off period probably has been waived by the government. Now, the big story from North Block, the GST coffers are finally ringing. Sources say the collection for the month of March stands at 96,000 crore rupees. That is the highest to date. Timsy Jaipuria, who broke that story, joins us now. Timsy, the government was hoping, the finance secretary in his conversation with us had said that they were targeting 1 lakh crore rupees, but they were hoping for that closer to June. It's already for the month of March at 96,000, and this is likely to edge higher. What are you picking up?
Well, that's right. March collections have come in as a surprise for the government, but not too much of a surprise, as government was expecting that government will get a collection of around 1 lakh odd crore rupees for the month of March. But as of today, that is as of April 23rd, government has received close to about 96,000 odd crore rupees from 55 lakh returns that have been filed under the GST regime. Now, what I understand from sources is the fact that about 76,000 odd crore rupees is a combination of CGST, SGST, IGST and the compensation cess, whereas around 20,000 odd crore rupees has come in from IGST from imports. On the other hand, government officials indicate that government is expecting the numbers to further improve, and they might also cross 1 lakh odd crore rupees, because government will soon be now preparing a combined data for the entire year, that is 9 months under the GST regime starting from 1st July. Now, not just this, government officials feel that come April, there will be further checks and balances when April collections that will be reflected in the month of May. That e-way bill has already kicked in, plus some other measures have also come in where government is trying to check the tax evasion and tax leakages from the system, and this would lead to further improvement in the collections of April and May. So let's see whether government actually is able to receive around 1 lakh odd crore rupees starting from the month of April, because that is what the expectation is and is estimated in the budget also. But as of now, good numbers coming in under GST regime. Back to you.
Okay, Timsy, appreciate you joining us to take that conversation forward. Movin Godino, GST Council member from Goa and MS Money partner at Deloitte. Mr. Godino, appreciate you joining us. You've been feeling confident in the last few conversations that we've had that we are going to now start to see an uptick in GST collections. 96,000 crores, of course, this is source-based information, is the best that we've seen since the rollout of the GST. Mr. Godino, what seems to now finally be working on the ground?
See, you must have seen my optimism in several interviews, and we were hoping to see this happen, and it has happened. we touching 96,000 crores, the collection touching that, and that is as of 23rd. It may go up slightly further by end of the month. And come April collections, it will be nothing less than 1 lakh crore. And even with the e-way bill coming, and after a month of that, in fact, I expect the revenues to further go up at least 10 to 15%. So we are basically going to meet our not only going to meet our targets, but it is perhaps it may surprise us positively by having even higher figures. I would say, and I have been always advocating that don't expect things to stabilize in one day. Now, given a 9-month experience, things have stabilized. It is a very firm grip onto the procedures that were followed, and the exercise that we are still undertaking to further smoothen things, like to simplify even further filing of the tax returns. We recently had a subcommittee meeting. We did consult all the tax consultants all over the country. Then we had people representing all the major stakeholders, whether it was trade bodies, whether it is the various chambers of commerce from the center as well as various states. What this shows is that the system is working well, and in spite of meeting the targets and expecting to meet the targets to our expectation, we further want to improve. Wherein there is a simplification which gives a lot of relief and simplicity to the common trader, to the small businessman, which has always been our main
Mr. Godino, as you pointed out, that the simplification of the form and the returns is what you're hoping for, and that could be the next step. But you also said that now the 9-month experience tells you that things have stabilized. You said that the GST now has a firm grip. Explain to us what will now be the priorities as far as the GST Council is concerned. Are rate revisions a priority any longer, or do you believe that most of that has been addressed? You know, inclusion of things like real estate, electricity, etc., is that likely to be a priority? What is now going to be the priority for the Council, sir?
See, the first thing is whether it is the electricity, real estate, it is bound to happen. But I would not set a deadline as of today, because we have to evaluate so many things in totality. We have to look at the overall picture. Now, what we are concerned is, while cross-matching, we have come to know there are some leakages. We have to plug those leakages. Then there will again be a rise in revenue. We are looking in the next couple of months, or in the next 3 months, wherein we would complete 1 year of GST. Certainly, we are looking at a situation when there will be some goods which we could take in, as we had last time reduced the taxes and taken them to a low bracket. We want the rationalization to be done where there would be just maybe thin goods and the normal goods, take it to two or three rates, wherein there would be further simplification and easier to follow, which people will and the traders will appreciate. And
can we expect that to happen? Can we expect that to happen as we mark the first anniversary of the GST?
Yes, because we are looking at the overall buoyancy in revenues, and if March figures as of 23rd peak of 96,000 crores, I think we are moving towards that situation. I can safely say we are really moving towards a good situation, and things have worked well in spite of all the hiccups because of the IT system and all. Even that has improved if you have seen the overall picture.
Right. Mani, I want you to comment on what you just heard from Mobin Godino there, saying that maybe if the revenue collections continue to edge higher, and this is the best that we've seen so far at 96,000 crores, that maybe we could see rates collapsing to 3, if not 2, by the time that we're ready to mark the first anniversary.
That would really be wonderful, but I would just caution on 2 notes. The first is that I would not be carried away by the fact that the GST revenues have crossed 96,000. And if you recollect, when we had the collections for the month of February, some of us at that point of time felt that for the month of March, it would touch 1 lakh crore. And I think it's a happy coincidence that TCS achieving 100 billion market cap and GST collections, also coming close to, 100,000 crores. I think it's a good thing to happen. But I would say that GST should not be viewed from the prism of tax collection alone. Industry has encountered a lot of difficulties in getting GST compliant. We have the e-way bill, which is coming in bits and pieces. Even today, there has been an announcement that 5 more states are going to come on board from 25th. And all of this is taking a toll on business, whether it is small business or large business. People are perpetually making changes to their systems and processes ever since GST started. My sense would be that the revenue stabilization of GST is very good. We are delighted with it. But this should be used as an opportunity to allow the system to cool down and stabilize a bit. Instead of going in with the next level of rate changes, the next level of inclusion, can real estate be brought in, can petroleum products be brought in, possibly we should give all that a bit of breathing space of maybe a quarter or 6 months. And once everything is set, once business is, back to normal, there is nothing which prevents an expansion of the GST in terms of the sector, in terms of the e-way bill. So now we have a lot of discussion in terms of the new return forms, for instance. And that has already got the corporates talking in terms of what system changes they will need to make if GST 3B goes off, GST 1 goes off, and we have a GST some other form which comes in. So let us allow things to cool down a bit and stabilize a bit in the interest of business.
Cool down. All right, Mr. Godino, I hope you're listening to what Mani said, that that while we may have reached some degree of stabilization on the revenue front, business stability is the need of the hour, whether it's the small trader or industry. They would like a cooling off. Don't tinker, don't tweak, simplify, improve, but let there be a cooling off period before we see any big changes being brought in. Momin Godino, member of the GST Council representing the state of Goa, and MS Mani, appreciate you joining us here on that CNBC TV18 exclusive. Up next, an impeachment motion against the Chief Justice of India takes a new twist. The Congress says they will challenge Vice President Venkaiah Naidu's plea. The other big story tonight, no impeachment motion, no material evidence. The Vice President of India and the Chairman of the Rajya Sabha, Venkaiah Naidu, has disposed the impeachment motion against the Chief Justice of India. This after the Congress on Friday, along with 64 members of Parliament in the Rajya Sabha, raised 5 charges against the country's highest judicial authority. In his 10-page order, Naidu cited several reasons for rejecting the impeachment notice. He said MPs who have presented the petition are unsure of their own case. In a press conference call to protest the rejection, Congress leader Kapil Sibal responded by calling Naidu's order illegal and ill-advised. One of the reasons cited by Naidu was that there is no material evidence of misbehavior. That reason was refuted by Kapil Sibal, who said that only an inquiry can prove misbehavior. He also went on to say that Venkaiah Naidu did not consult the Supreme Court collegium before arriving at a decision, while Naidu maintained that he had consulted legal experts and taken cognizance of comments made in the media. The Congress is not backing down. It has vowed to take the matter to the Supreme Court, where it says it will challenge the order.
To say the least, the order is unprecedented, illegal, ill-advised, and hasty. The chairman has passed an order which is required to be passed after a full-fledged inquiry.
Well, the decision is correct, but he need not have taken 2 days because they didn't even follow this. Congress and others did not follow the procedure laid down by Parliament. That you cannot publicize the allegations till the matter is to be taken up for discussion.
Well, the political back and forth continues over the matter involving the Chief Justice of India. The Congress now saying that they will move the Supreme Court. To a corporate news break now, another twist in the long list of twists and turns in the race for Fortis Healthcare. Multiple players have thrown their hat into the ring to buy Fortis, and the board is expected to take a decision this Thursday. Now, sources tell us that Manipal, backed by private equity player TPG, could hold the upper hand in this race. Nisha joins us now with more. Nisha, explain to us why that's the case.
As the deadline for putting in the final binding bid for Fortis Healthcare really nears, there is an important point to note here, and sources with direct knowledge of the agreement between Manipal TPG as well as Fortis Healthcare's board do share with CNBC TV18 that there is an important right that TPG Manipal really retains by way of their agreement that they signed for a transaction with Fortis board earlier. Now, that right is the right to match the highest offer coming in for Fortis Healthcare. So that means that from the day a higher offer than Manipal TPG comes into the picture for Fortis Healthcare, they will get now the 5 days to evaluate and match that particular offer. So Manipal TPG still retains that right and has an upper hand over all the bidders for Fortis Healthcare, is the understanding from this right. Now, Fortis Healthcare board had requested Manipal TPG to waive this particular offer, but we do gather from sources that as of today, Manipal TPG has refused to waive their right to match. What this also means is that Munjal Burman, who gave their offer a few days back, so Manipal TPG's deadline for matching their offer or going ahead on counter bidding their offer really ends tomorrow. But by the end of tomorrow, if any other binding offer comes in, then TPG Manipal will have the right to match that particular offer, is what we really gather from sources with direct knowledge. So this highly contested battle is getting even more interesting at this point.
All right, Nisha, appreciate you joining us with the latest. Now, the Walmart-Flipkart deal would be great for e-commerce in India. That's the word in from Amit Agarwal, the country head of Amazon. Remember, there have been reports that suggest that Amazon is also keen on striking a deal with Flipkart. In a conversation with CNBC TV18 Saina Denugara, Agarwal also talked about Amazon's plans for its grocery business in India. Here's that exclusive.
Let me complete that loop of conversation around Walmart. What the ramifications of that will be for business for Amazon here in India?
I think it's great for India. E-commerce is so early that you would need a lot of investment to make e-commerce what it should be in a diverse country like India. So in my opinion, the more investment that flows in, the better it is. At such an early stage, you want as much investment that can flow in.
Let's also talk about Amazon now, which is your product around delivery of groceries and other daily needs, so to speak. How fast is Amazon now growing? How much is it contributing to your overall revenues as a percentage share? And where do you see that vertical developing?
The service available only in 4 cities that allows customers to get 2-hour delivery of kind of the things that they would miss that they want last minute. We also hook up other large retailers like a Big Bazaar or a More and others so that customers can shop their selection as well.
Well, that's Amit Agarwal of Amazon betting big on India. With that, it's time for us to wrap up this edition of What's Up. Thanks very much for watching. Up next, historic day for TCS, becomes the first Indian company to cross the $100 billion mark in market capitalization, and in-depth analysis of how it reached that milestone coming up.